Bob Nardelli is with us this morning, formerly CEO of Home Depot. Bob, what do you think this tells us about the economy here? Is this a reflection of Walmart, or is the consumer actually the best part of the economic recovery in the U.S.?
Yeah, I think the consumer is, but it's mixed. As I said earlier, I mean, I think people are moving from maintenance of their home to investment because they see starts up to 1.2 million. So now you will go in and remodel your bathroom or your kitchen because you're trying to improve the marketability, the sales value. It used to be if it wasn't broke, you know, don't fix it. So we moved from maintenance phase to an investment phase. I think if you look at Walmart, we're talking about consumer staples, which is very good. I think that, you know, the discretionary goods that we saw with Target and some of the others, I think that's going to continue to be pretty dicey, and that's where you're playing against Amazon bigger than any place else.
Yeah, but you also have some cracks in the system, right? I mean, you mentioned the auto sector showing some real weakness. We want to get your take on that as well.
Yeah, and the latest auto numbers that came out is we're seeing from Ford, GM, they're using so many incentives to get consumers to keep up these sales, and we're seeing a maturation in the sales of automobiles, and Bob actually brought it up. Most of their sales are starting to go into fleets, and you're seeing that people aren't buying these crossover SUVs as well as regular SUVs, so we're seeing cracks in
this is a little bit of deja vu back 2008, right? 70 months, zero interest, $5,000 to $7,000 on the hood. We see auto loan defaults up. We see people moving into fleet. We see, you know, lower fuel prices have really created the demand for trucks, SUVs. What we haven't heard a lot about is the old CAFE standards. There's going to be a major collision out there in trying to meet the CAFE standards on miles.
They're not going to meet them.
They're not going to meet them. And then yesterday we saw the government lay another regulation. I mean, it's just continuously trying to stifle.
What's the next regulation?
The next regulation they now put on emissions on trucks on highway. So again,
garbage trucks, tractor trailers, 25% emissions reduction handed down by the Obama administration.
Again,
more from the EPA.
Yeah.
More from the EPA is controlling this thing unbelievably. But there's going to be a big collision. They better have an off-ramp because they're not going to make the CAFE standards.
I just want to point out that this presidency has exceeded in terms of the regulations handed down. This is major regulations, economically significant regulations handed down by this administration has hit a record. It's north of 600 rules and regs that have come out in the last nearly 8 years.
And that's hitting small businesses.
The potential, and this is the latest. This is one of the last big ones they're going to do, are the emission standards for heavy-duty trucks. But if you look at the total economic impact, it is going to be close to $1 trillion.
Yes.
This one alone is a $31 billion regulation on engine and truck manufacturers.
And they pass it on to businesses. So then the small businesses are going to have to eat those costs, and they can't necessarily relay that on the consumer. But I want to go back to Walmart. And so when we look at a number like this today, we saw one of the latest moves Walmart did was they bought Jet.com, right? It's going
trying to compete with Amazon.
Exactly. And it's one of those things that they kind of really overpaid for it, but they need to find growth, especially in this market, because look at the multiple they're trading at. 17 times earnings for a consumer staples company. That is relatively high for this type of market.
Well, we're seeing that in the auto business too, Maria. I mean, you look at GM getting into Lyft. We see Ford trying to get into the autonomous to get against Tesla. So competition out there, you know, with technology moving forward, it's a frenzy. And the multiples that people expect out there are outrageous. I mean, they're tying multiples directly to the market, and we're seeing outrageous multiples on companies. I see them every day.
And the reason why we're seeing this push for growth and these companies merging and they're trying to get revenue streams is because they've already caught so many costs. They can't do any more cost cutting, and so that's the problem. They're trying to find growth wherever they can get it.
We saw the productivity number, right?
It was horrible.
Terrible. More hours for less output.
Yeah. But, I mean, on top of all of this, what Dagan brings up is really critical, and that is this regulatory environment is just strangling businesses at a time that they're facing diminished demand.
And there will be if Hillary Clinton gets elected to the presidency, there will be zero reversal of this. None. Zero. And even more ahead. one quick
So you're talking about a 1-2% economy for the next several years?
That's why, but but the administration forever has acted like that we just need to spend more money on bridges, that spending by the government is what's the critical thing to growing the economy. How about just getting out of the way of business? That they turn the other cheek when it comes to talking about the burden that they've placed on this on the very job creators.
We all know the government knows what to do with our money better than we do.
Right.
No, I mean, just think about, again, one of Trump's platforms, corporate tax. Let us be globally competitive.
15% is what he wants.
Let us be globally competitive. I mean, I used to compete against them all the time, and I was disadvantaged. So we would have to drive productivity. We'd have to do a lot of other things just to have a level.
Competing with international automakers.
Exactly.
Well, Bob